Good evening, everybody. It's Matrix here, chat room moderator of BRT. It's September 18th, 2018. And here is a video that I promised, basically showing you my secret sauce setup. I'm going to be talking about my edge or defining my edge. And let's do this. But before I do that, actually, let's go through a disclaimer. I am not a professional financial advisor. I'm not a guru or mentor. I'm basically just a regular Joe day trader. Uh, I will not be liable for your losses by using the information that I'm about to provide. And uh, this information is basically of my personal opinion and my past experiences of what I've learned. Okay, so the past performance is not indicative of future price. All right. So, and even before I start, I like to make a little credit to my mentor who has basically taught me how to trade, and he himself has spent a lot of time with me and helped me develop and find this edge. Okay, his name is Patrick Mitchell, and I will be leaving his Twitter link in the video description below. If you want to hit him up, go ahead. Awesome guy, fantastic trader. So whatever he taught me here, or whatever he taught me, basically I took what he taught me, and this is what I have come up with, and this is my interpretation. Okay, so let's start. What is an edge? An edge is basically a trading setup that has like a higher probability of the stock going in one direction over another. So I want to talk about this and really break it down. So the edge, let's start with, I was a semi-pro poker player about 10 years ago, right? And I studied day in, day out on the subject. I played 12-hour days, right? I learned to deal cards in both underground poker clubs. I was playing online a lot and read a lot of poker books, right? So in any given poker book, they teach you that when in a heads-up one-on-one situation and you are holding pocket aces pre-flop, the probability of you winning is 85%. And that probability would be your edge. So over a long period of time, if you were to play only that edge, you would come out a winner. Okay, so that's what an edge is. Now let's go through the ingredients of this edge though, right? A trading edge is totally different. A trading edge is not as simple as just two cards. So there are many variables and factors involved in a trading edge. And if you ask anyone who knows me personally as a trader, they'll probably let you know that I'm mostly a short bias trader. So basically shorting a stock is when you're making profits while the price comes down, okay? And if you're reading my watch list and watching my trade recaps, you'll see a lot of times, about 75% of the time, I'm looking for short plays. And there's a very good reason for that, why I pick the short plays, okay? It's basically human nature, okay? Human nature in itself, it dictates that we are genetically programmed to avoid danger and harm, okay? So we usually take the path of least resistance, okay? So when a stock start decreasing in price, it triggers the discomfort and fear and emotional panic. So for whoever who bought that stock, when the price starts coming down, all these kind of emotions start coming out, okay? And those who cannot really withstand the pain, they usually take the quickest way out. Hence, they sell, right? So with the majority of the market made up of people who are really susceptible to the emotions of fear. This is why I choose to short instead of buying most of the time. Okay, so that's ingredient number one. I like shorting stocks. Okay, ingredient number two. I want to talk about kind of like a short example here. I mean, let's say Apple just came out with a new iPhone, right? Apple came out with the iPhone XR, and the grand total for that iPhone is, I think it's $2,000, right? So it took you a lot of time to save and earn that money, and you're probably it probably took you a while to debate on whether you want to buy that iPhone in the first place, because $2,000, that's a lot of money, right? And let's say you did buy that phone. Okay, so all of a sudden, the very next day, iPhone sells out, and some random guy offers you to buy that phone off you, right? Let's say he offers you $4,000. Okay, are you gonna take as much time making the decision to sell that iPhone? Oh, sorry, yeah, making the decision to sell that iPhone versus the time you would take to buy it, like the time that you would consider buying that phone, right? No, I mean, here, take my phone. Give me the money, take my phone. I'm gonna insta sell, right? So human nature in itself, right, it dictates it's easier for us to make a decision when it's selling over buying, because when you're buying, you're really debating on whether you want to spend your hard-earned money, and when you're selling, basically you are taking in an instant gratification and taking in profits. So basically, this is kind of like an emotional trigger as well. Uh, Often it happens when the price of a stock is going up overwhelming speed. So if a stock is going parabolic, or the price of stock is going up really fast, this is the type of emotions that gets triggered in the market. And if somebody wanted to buy that stock from you at double that price, you wouldn't even have to think about it. You sell, right? So emotionally, uh, it's easier to sell than it is to buy. Okay. Um, the next ingredient I want to talk about is basically whole dollars and psychological numbers. Okay. So kind of like whole dollar amounts and half dollar amounts. So $10, $15, $20, or 10, 10.50, 11, 11.50, etc., etc. Right. Um, Human nature in itself, we are more subconsciously willing to buy something for $9.99 over something that is priced at 10.01, let's say, right? It's a consumerism pricing effect, right? So knowing that, I integrated it into what I call my edge. So when I'm looking to enter a short trade, right, I'm always looking to get an entry to the closest possible whole number, or half dollar mark that would favor the situation. So if a stock is running up into the $10 mark, I would try to get it short as close to the $10 mark as possible, basically. So in itself, the whole dollars and the half dollars works because of consumerism, right? I would rather buy something at $9.99 rather than buy something at 10.01, right? Because at $9.99, I would be thinking subconsciously, I'd be like, oh, it's less than $10. It's just $9. So I'm going to spend that money versus 10.01. I'm looking at the number and I'm like, this is $10. I don't want to buy it anymore, right? So it's easier for the mind to use psychological numbers, right? Okay, so that would be ingredient number three. Ingredient number four would be resistance. Okay, so what is resistance? Resistance is basically a price point of a stock where there was an overwhelming supply, or um, basically where traders tend to sell. And it's also an emotional based area, because past resistance is if you look at a chart, right? I always look at the chart history. When you're looking at chart, you start from the left. So basically the history of a chart. So I'll be looking for resistance area, right? And what a resistance is basically a point where all of a sudden the market starts selling and the price can't get over a resistance area, right? So the whole world is watching this mark. Uh, let's say the resistance here, and today the stock price is coming up back to where it was before, and the whole world is watching this resistance mark because they are thinking, oh, last time this is where people sold, and uh, this time it might happen again. So at this resistance point, I might be selling as well. Okay, so resistance mark, usually at a whole dollar, I'll be looking for that, and that would be ingredient number 4. Okay, and the next ingredient I picked out is basically mid to large cap stocks. Okay, so there's a big misconception out there. Actually, somebody asked me today why I don't play penny stocks or the small cap stocks. All right, there's a big misconception out there in the trading world that states that there's no edge when you're trading the large cap stocks. Okay, some say is because when we trade these stocks, we're competing against like institutional traders. And what I call is the big boys, right? They have the fancy software, they have all the massive buying power, they have a ton of money, right? And they're professionals. So some would think that it's harder to make money when you're in that same large cap market, trying to compete against them, right? Whereas they would say, oh, I like to play the penny stocks because the institutions don't trade penny stocks. You're basically trading in the pool with all these retail traders and a lot of times newer traders, right? And this is a big misconception, okay? We as traders, we trade on technicals. Day traders, we trade on technicals and analysis. So basically support, resistance, indicators, moving averages, right? And a lot of these newer traders, they don't understand or respect indicators as well as these institutional guys, right? The institutional traders, they are trading on specific rules, all right? They use the indicators, they know support and resistance, they know moving averages. So they use all these indicators. So from my point of view, why I trade these large cap stocks is basically because I know for a fact that institutions will be making big moves at price points where the indicators happen and the support and resistance happen, right? Who says when I'm trading these big stocks that I'm actually competing against the institutions, right? I'm not really competing against them. Knowing that these institutions and the big boys, they win most of the time, I actually am piggybacking their moves, right? Knowing that they will be making moves at these resistance and support areas and these moving average areas, right? So knowing that, and knowing that they have the power to move the price of a stock, that in itself is predictability and is an ingredient to the edge. Versus if you were to be trading penny stocks, right? Penny stock land, there isn't much institutional traders in there, right? I mean, I would uh, even go so bold as to say institutions don't trade penny stocks, right? So who are following these rules? Nobody. Nobody. It's basically made up of a bunch of random traders buying and selling whenever they want. And then sometimes you get this random guy who actually knows technical analysis, but it wouldn't work for them, right? Let's say they bought something at a key support level, and then all of a sudden the stock dumps on them, and then they would go and say, "Hey, these technical indicators does not work." Well, it's not because they don't work. It's because whoever's moving the stock price don't know or use these technical indicators, right? Versus mid to large cap stocks, it's mostly traded by institutions, and what institutions use are technical indicators. Okay, so that would be ingredient number 5. Okay, so if you are to sum up all these ingredients and make it into one big ball, um, I would like to articulate this into my edge. So what my edge is basically I like shorting mid to large cap stocks that are running up very fast into whole numbers or key resistance levels, right? Knowing that shorting uh, shorting stocks, it brings out the emotional side of the fear factor of of traders, right? A stock running up very fast would also bring in people who would want to sell really fast, right? And then we talked about whole numbers, basically the psychological number of consumerism in itself, and then we talked about key resistance level. So basically, the past history of what the stock did. Okay, so my edge, just to reiterate, my edge, just to rephrase it again, it's basically to short mid to large cap stocks that are running up very fast into a whole number, which are also key resistance area. All right, so that's the one setup that I look for all the time. Okay, and I'm not looking for when I'm shorting these stocks, I'm not looking for the stock to come down all the way and lose its gains. I'm looking for that uh, one massive dump, and then just quickly taking my profits, because um, traders are also taught to buy in cheap, or what we in the industry call buy the dip. Okay, so if the price take a sudden drop and it starts leveling out, I'm gonna take my money, because the chances of people of buying momentum, of people buying back in, is higher, since the price has dropped and it's now level and it's bottoming out. So I'm not looking for that wash all the way down. I'm just gonna look for that quick profit take wash and just take my money and move on. Okay, so that's my edge. um I hope I've explained this good enough. My English in itself is not that great, so hopefully you guys don't have trouble understanding this. Now, looking here, let's get into some charts, and I'd like to show you some recent examples of how my edge works, right? Basically, yeah, let's take a look at the chart here, MTCH, okay? And I will be showing you daily charts, right? So MTCH right here, if you can see my mouse cursor here, the stock has ran up 1, 2, 3, 4, 5, 6. So 6, 7 days in a row. really quick, right? From basically from $50 all the way to $60. This here is a psychological whole number, right? A stock that has ran up really fast, and it's a mid to large cap stock. And I'm looking for that day where the stocks sell off and people take profits, right? So on this day, on this last run up, where it's very overly extended, I made it. I made MTCH. I put it on my watch list, and I told everybody, "Hey, this might be it. Look for the short and look for people taking their money and selling at the whole $1.60." So lo and behold, we have the 60. The next day it dumped, and there's example number one, right? Here we are. This is PDD. It's a recent IPO, and same thing here. I called this out to short on this day here. So the stock made a nice run up, really quick and pretty overextended. The stock shot up from the 19s all the way into the 30s and topped out a little bit, right? So on this day, I put this stock on my watch list, and I let everybody know in the chat room, basically, look for the $30 mark reject, the whole dollar of 30 reject, and take the short on it. And here we go. This dump day, okay. PDD. SQ. SQ had a couple of examples here, right? Within this year, we see this massive run up, basically all the way from the 45 all the way up into the 90s area, right? So on this day here, you can see the example of stock running up to the whole dollar of 73, which is a psychological whole number, right? This is prior resistance. This is where the stock topped out before. And on this day, the stock ran up huge, basically from 65 all the way to 73. And on the very next day, the stock basically tanked, right? So there's one example of the edge working out. Here's another one. Look at this run up right here from the 75 mark, right, all the way up to 90. And the 90 starts topping out over here, right? So on this day at the 90, let's see here, the 91.50 area, so whole and half dollars, 91.50 area, the stock has ran a lot of days in a row, ran really quick as well. I was telling the members to watch out for this, for the profit taking wash, and lo and behold, whole number or psychological number, half dollar. And even look at this dump right here, right? And then even look at this day. This was yesterday. It hit that resistance level again, and today it dumped. Okay. We have Facebook. Facebook at the beginning of the year basically ran up as well. So from here, this is about the 180 mark, all the way up to 195, right? And at 195, that's definitely a psychological whole number. So on this day, the next day, the stock could not get past it, and it dumped. It dumped a few days in a row as well. So that's a nice short, right? Looking at this run up again, right? So this is basically when they announce earnings, and it has a bad reaction on earnings. So the stock dumped from there. But what we're focusing on is this secret sauce, this edge. So for the stock to run back up from 170, where it bottomed out, all the way up to the 185, so psychological whole number. And eventually the next day it tried again, run up really quick, and got hammered. Okay, so the area to watch for was the 185 area, right? And also resistance area if you draw a line around this 190 area as well. Okay, so 190 was here, right? And the stock just tanked right away. AMD, very recent, for the past couple of months, the stock just basically ran, right? I would say the run up started here from the $20 mark, right? I mean, some would say the run up started here at 16. nonetheless, it just basically ran, right? The price action got parabolic really fast. You can see the dump here. But what I'm more interested in is this from this 25 area, 27 area, went all the way up to 34. And on this day, I was already telling people to watch it for that dump. Okay, so lo and behold, next day it gapped up. It pushed even faster up into the 34, the psychological whole number, and people start taking profits, and it dumped as well. So perfect short entry, whole number here, and it washed all the way back down to the 30s. Right, so very profitable short on this day here. AMD, Apple, right? Apple, I mean, look at this run up here from 190 all the way to $210. Okay, so that's a pretty big gain. $20 in 1, 2, 3, 4, 5 days. So that's a massive gain. And here it dumped at 210, psychological whole number on this day. This would be a fantastic short. Looking at the edge and the secret sauce strategy or setup happening again. And then we have this massive run up again, okay, hitting the 230 mark, and it started topping out. You saw these sellers candle, doji candle, and it started topping out, and basically it just dumps right back down. So had you taken a short here at the 230 mark or near the 230 mark, risking 230s, and held this, you would have made like $50 per share, right? So a very profitable short. Here again, after this dump, we have a bounce, and this bounce basically was from 216 all the way back up to near 225, which is a psychological whole number. And the very next day again, it dumps and passed resistance as well. We see resistance here. We see resistance here. Prior support now becomes resistance, technical analysis. So these big and large caps follow these resistance marks very, very well, right? So here we see 3 examples. We see one here, and one here on Apple. HUYA. Yeah, this is a good example. I mean, look at this run up, right? Stock basically started running like crazy, got up to the $50 mark, right? And just got hammered right back down. $50 prior resistance, got hammered right back down. HUYA. CRM, Salesforce, right? I mean, look at this here run up, right? Look at this day, and then coupled with, so this had a major run from 146, okay, ran up to 152. The next day it opened down a little, it dips. Oh, no. The next day it opened up. It opened up right into this key area, right? And basically the stock ran from here all the way to here. And we see a profit take and basically a really fast price action up to a keyhole number area. So this is a 155. Yeah, so 155, and the stock just tanked from there, right? CRM. And Momo, look at this run up here from the $40 all the way up to 54. Psychological whole number again, and we see a straight dump, right? We see this action happening again from the $38, even the $36, all the way up to 48, whole number, prior resistance, got hammered back down. Once again, big run up, prior resistance, whole number, got hammered back down. So hopefully these examples kind of showed you and helped define what I talked about earlier, right? And this in itself is my secret sauce strategy, or the one setup I look to on a nightly basis. And if you guys enjoy this, or if you have any questions about this, let me know. I also want to know what your edge is, right? So in the comment section below, if you can define your edge and you would like to share, I would love to hear it. Uh, Comments are always welcome. If you like this video, make sure you hit the share, like, and subscribe. Remember, I also mentioned that I will also be putting the Twitter link to my mentor, Mr. Patrick Mitchell, in the video description, because I really believe in giving credit where credit is due. It's because of him that me finding my edge is possible for me. So I like to personally thank him on this video right now. And if you guys enjoy this video, make sure you like, share, and subscribe. And I will be putting out more content in the future. So have a great evening, guys. Cheers.